So if you look at the Fibonacci 23% trading strategy that we use, you can see it on different time frames. So we're on a US dollar, Canadian dollar, we're on a 5 minute time frame. And if you notice, we're going to use this impulsive leg, and we're going to look at this correction that's on it. So I'm showing you on a lower time frame that it still could play out, right? All right, so we got our impulse, and then we got our signal, the where price does what? It crosses the what? The 23%. So we get a nice little pullback. All right, we cross the 23. Now, what we want to look for is what? We want to look for opportunities to get back into uh, the trade once it comes back above the 23%. And typically we got areas where so I'll show you. All right, so whenever this happens, you can then look at what we call our supply zones. All right, so we already know how to do our supply and demand zones. All right, this was the last green candle before price engulfed it and moved to the downside. So this is a supply zone, right? Okay, what happens? Price comes back, gets close to the supply zone, and then we drop. We get to the 50%, and then we come back for a retest in this area. But then look here, this is the last green candle before this. So all it's doing is coming back to this area of a supply zone. Okay, so I told you guys that supply zones and demand zones can change from level to level. All right, so this is one right here. Now, what do we say? We say that when price crosses the 23%, we want to wait for price to come back above for a retest. Typically, when that happens, we feel that we have a high probability that we're at least going to touch this 61%. Like I told you guys before, it's not going to happen every time, but we get it enough times that we can deem this as a strategy. Okay, look what happened. We get up here. Typically, this is probably when you would have been looking for some form of entry with a protected stop loss above here. All right, we get to moving. We get to the 50. Some people like to trade and get out at different fib levels. You can do that because this is an area of market structure as well right here. All right. All right, we get here, push back up. Eventually, we push back down to the 61%. So this would have been a success. Also, when the 61% is what? Violated, it gives another higher probability that we're going to go down to at least the 78%, and we already have that here at the 78%. In fact, now it's trying to get down to the 88. But these are probabilities that happen once these levels are violated. So this is really one of my bread and butter strategies that I use to get to where I need to. I feel very, very comfortable with using the fibs in this manner. And I'm basically giving it away for free. But look, so we could do the same here. Of course, the move is already played out, but let's say, let me take this off for you guys. All right, let's say you were here and this was the end. So see that's the impulse, right? Okay, so we get here, all right, and then price um get back above 23% back in this area here. All right. So we were bullish, and then all of a sudden a bearish wick came in and it created bearish, right? And we pushed. So this candle comes all the way down and hits the 61. Now our entry point would have been somewhere up in here again. Why? Because we was alerted that it crossed the 23%, but it came back above. So that's what we're looking for entry, and we know, all right, that we want to at least take it to the 61, or you can go to the 78, and of course we got all these, and of course we're going on down and doing it. But yeah, practice, find your impulsive legs, draw your fibs up, and see if you can play that game. All right, y'all have a great one.